This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending February 18th, 2023. Our question this week is, what is proof of stake? The answer will be provided later in the video. This week, the market ended mixed. The Dow Jones Industrial Average increased 0.39% on Friday, but was down minus 0.13% for the week. The S&P 500 decreased minus 0.28% on Friday and was down minus 0.28% for the week. The Nasdaq decreased minus 0.58% on Friday, but was up 0.59% for the week. Looking at the week, we can see that there were 8 up finishes versus 7 down finishes for the major indexes. On Monday and Wednesday, all the major indexes finished up. On Tuesday, the Dow Jones Industrial Average and the S&P 500 finished down, while the Nasdaq finished up. On Thursday, all the major indexes finished down. And on Friday, the Dow Jones Industrial Average finished up, while the S&P 500 and the Nasdaq finished down. New unemployment claims were 194,000. Retail sales jumped 3%. In January, wholesale prices rose 0.7%. Inflation rose 0.5% in January and was up 6.4% from a year ago. Mortgage demand dropped 7.7% last week, and Bitcoin topped $24,500 amid talk of U.S. regulation of the crypto market. New unemployment claims, retail sales jumping 3%, wholesale prices rising 0.7%, inflation increasing 0.5% in January and 6.4% up from a year ago, mortgage demand dropping, and Bitcoin rising above $24,500 are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is proof of stake? Proof of stake is a consensus mechanism for processing electronic transfers and creating new blocks in a blockchain. It is a method of validating entries into a distributed database and in keeping the database secure. The database with cryptocurrencies is called a blockchain. With proof of stake, it is the cryptocurrency owners who validate block transactions based on the numbers of coins that they own and stake. Proof of stake mechanisms require validators to hold and stake their tokens for the privilege of earning transaction fees. In other words, the more cryptocurrency you own and pledge, the more you are able to earn transaction fees for validating transactions. Many companies and or foundations like Ethereum and Cardano created proof of stake tokens. These are also called altcoins because they were created as alternatives to Bitcoin. However, they are not really alternatives to Bitcoin because Bitcoin is the only truly decentralized crypto asset money with a global uncorruptible network of block transactions. Bitcoin is based on proof of work. Bitcoin is mathematically mined by using computational computers to solve crypto puzzles. There are no Bitcoin companies because Bitcoin is mined, it is not created. There are Bitcoin mining companies just like there are gold mining companies. Do you own any crypto companies and their tokens? Do you own Bitcoin? Do you own any Bitcoin mining stocks? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourage you from reading, especially books. School taught you to be a worker, they did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside Trading Watch List from the week ending February 18th, 2023. The strongest performer on the list this week was Riot Blockchain Incorporated, ticker symbol RIOT. In the third column, it was up 3.62% on Friday and increased 19.6% for the week. Riot Blockchain is a crypto mining company that primarily focuses on Bitcoin and general blockchain technology. Riot has deployed approximately 8,000 application specific integrated circuit miners at its cryptocurrency mining facility. Through its subsidiary, the company also seeks to develop a blockchain based escrow service for wholesale telecom carriers. Looking at a summary of results, you can see that Riot has increased 94.4% year to date. I generated cash flow from Riot Blockchain this week as I have generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 ETF SPY. The Southside portfolio is up 24.84% versus 6.49% up for SPY, a difference of 18.35%. The Southside is beating SPY by more than 18%. The cash flow generated by the Southside cash flow system for this week was 3.62% of the portfolio account value. The account value changed by 9.45%. Meanwhile, the S&P 500 ETF SPY changed by minus 0.19%. Bitcoin watch. Bitcoin gained 13.36% this past week, but continues to be in a bear market. It is down more than 64% from its all-time high, which was achieved in November 2021. I sold option contracts on two positions this week. They were both puts that range from $12.35 to $61.38. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists levels 1, 2, and 3. The videos are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.